Welcome back, everyone. My name is Fredrik Stensved. I'm an equity research analyst here at ABG, covering the real estate market and the real estate companies. The next company to present is Eastnine, and we are very pleased to have the CEO, Kęstutis Sasnauskas, with us today. Please go ahead.
Thank you very much, and I'm pleased that I have opportunity to present Eastnine tonight. If we look briefly at Eastnine, Eastnine is a Swedish real estate company, but with one difference, with all of its assets being actually in the Baltics and now Poland. We focus primarily on prime offices and prime logistics. Today we have a quite significant portfolio of top office assets in capital cities of Vilnius and Riga, and now we also entered Polish market. So our total assets today are around 750 million euros, with property value of around 600 million euros. Our rental income is expected to be at around 33 million euros and total leasable area of 183,000 square meters. So if we look on our properties, actually they are all very centrally located. They are all very modern, and they are relatively big in size. Overall, if you look on our portfolio in Vilnius, we are focused on CBD area and very central locations. Same goes to Riga, again, very modern property portfolio. And in Riga, we also have quite significant development projects. And if you look on our third market in Poznan, which is a regional city of Poland, we just entered with a relatively big acquisition of Nowy Rynek D, which was acquired from Skanska. But I will go into it a bit more into detail. And basically, if we look on the region as such, Baltic and now Polish region, in terms of population, is actually bigger than the Nordics. The region overall historically has been growing faster than the Nordics as well. The Baltics have been converging towards Nordic region over years, and Poland had its own very strong development path over the last 30 years, basically. And it continues that way. So for us, the entrance of Polish market is very natural, but also it accomplishes it opens up very, very great growth opportunities for us. And of course, it's very similar to what we see primarily in our core market of Vilnius. The office segment is significantly bigger in Poland. There are 9 cities as large as the smallest capital in the Baltics. So from that perspective, there is huge growth opportunity. And if you look on the region compared to the Nordics, it's actually bigger. So from that perspective, the universe and growth potential over time is significantly bigger. Just a couple of words of our last acquisition that came after the quarter. It was a very significant transaction, not only for us. It was actually the largest regional transaction in Poland ever made. We acquired the property from Skanska. It's 39,000 square meters of leasable area. Property will be LEED and LEED Platinum certified, as well as WELL certified. The largest tenant is Allegro, a Polish e-com operator, and the property will generate approximately 7.5 million euros of revenue for us. It actually boosts our revenues and boosts our profitability very, very significantly. And of course, for us, it's a natural step to do a bigger transaction in Poland once we enter the new market. Here is just on the map, you can see where it's located. It's very centrally located, very close to the railway station. Very basically, there is a new establishment of a future CBD area in the very, very heart of Poznan. And just a picture of interior of the property, and just a couple of pictures again to see how it looks. So if we now summarize a little bit our properties, we have 14 properties, 183,000 square meters of top office space, at closer to 600 million euros in total asset value. If you look on our top tenants, you would recognize a number of Nordic names, and of course now we have a slight decrease or significant decrease actually of Danske Bank and additionally new tenant in form of Allegro, which is a Polish operator. But if you look overall on the sort of tenancy, it's a very, very multinational list with very, very strong financials. Again, if you look on the locations, they're all very central. They're very, very probably top locations in each of the cities, and this is how we intend to build our portfolio in the future. Now going a little bit to the highlights of the quarter. We have actually been working with pooling more cash to do this acquisition that is now announced in Poland during the quarter. But we also have a very, very strong fundamentals in the market again. We're seeing higher occupancy rates as well as our portfolio. We see increased rental levels, partially due to indexation, but also there is a bigger push in the market following the inflation. We have positive net letting. We have also very strong fundamentals, especially in Vilnius when it comes to overall letting in the market. But of course, we have one negative news, and that is the war in Ukraine that has affected the value and exit possibilities of our holding in Russia. It's our last non-core holding that was planned to be IPO'd before the summer, but of course the war has scrapped those plans. And we also included Poland, and now Poland already is a part of our investment universe. So if we look a little bit on the macro picture in the Baltics, Baltics actually are performing very, very good. We've seen a slight dip in the corona during 2020. We have a very strong recovery in 2021. And actually this recovery continues. Now there are some of the downgrades coming in terms of potential growth, but we still see the market being very, very strong. Of course, inflation soaring in the Baltics faster than or growing faster than it is in the surrounding regions. And that is again driven a little bit from a smaller economies. And in a way, this inflation, we see it as more positive because Baltic markets are not as effective for the Euribor, and we are borrowing in Euribor. So the overall, it pushes the prices up, it pushes a little bit even higher the rents up, actually. We've seen relatively stable yields during the last quarter. Yields have been going down quite significantly over 2021, but now we believe they are stabilizing, and at the same time, with the growing inflation, probably growing interest costs, we will see a higher increase as well in the rental levels overall, and that's what we're witnessing right now in the market. During last year, we made 3 acquisitions, 2 in Vilnius, 1 in Riga. Now they are all included in the Q1 figures. The Poznan acquisition is actually already taken over, so it started generating revenues from the 9th of May. So it will be seen already in Q2 figures, but not so fully. If we talk about Mellon, Mellon is the holding that we made a bigger value write-down during the quarter. It's based on a theoretical model, and of course the weighted average cost of capital increased in our universe. It's also a bit unclear what is the proper exchange rate in the ruble. So the value decrease was quite significant. Nevertheless, we still believe that the company will perform pretty well. But of course, exit opportunities are limited at the time and a bit unclear at this point of time. We also work very hard on sustainability. It's a part of our DNA. It's a part of our overall work. It's integrated fully. But we score 92 points in GRESB. We are actually among top players even compared to the Nordic peers. We are number third company ranked under Allbright's gender equality on Stockholm Stock Exchange. It's among 320 companies overall. So it's a very, very high score. Our green financing is probably smaller compared to our peers, but that's because there is still lower availability of actually that type of financing in our region, in the Baltics, but we're gradually shifting it, and it actually increased to 34%. We actually expect it to increase even further. The acquisition of Novorinek was a green loan, so that share will also increase. And our properties, 81% of our gross floor space is actually LEED Platinum or BREEAM Excellent or Outstanding certified. So it's not only certified, it's actually among the highest brackets there is in the market. So if we look just on some of the financial highlights for the quarter, annual rent 185 euros on average per square meter and year. Occupancy rate 91%, surplus ratio very high at 88%. We think that surplus ratio will increase as we are in the universe of triple net leases. Property yield 4.9, net LTV 41%, and equity to assets ratio still very, very high at 55%. If you look on some of the highlights from the Q1 in terms of revenue is continuing growing, 22% up in rental income, 19% up in net operating income, and 9% up in profit from property management. I will come back a little bit to that later, looking at our earnings capacity, because we are such a fast-growing company, so that is it's even more important to look at actually these days. Our assets at around 630 million euros at the end of the quarter. As I told you, we're at 700, above 700 as of today because of the new acquisition. If we look at earnings capacity, which is probably the most important part to look at when you look at us, you see that our rental revenues are actually compared to Q1, end of Q1, are growing by 30%. Our net operating income is growing actually 33%, and most importantly, our profit from property management is growing at 45%. And this is an effect of adding more properties, is that we actually see a significant boost in profitability because our costs are not growing the same pace. So there is a huge value creation by adding more properties to the portfolio. Just briefly on the share development, of course, share was hit during the quarter, as most of the real estate companies. We probably were as well affected by the fact of uncertainty with Russia. But if you look on the share price and distribution of our NAV, you can see that actually we're trading at a slight discount, even if we exclude the Melon Fashion Group from our calculation. So why we think Eastnine is an exciting story? We are a growth company. We grow very fast. And if you look on our overall development of our business, you see that quarter by quarter and year by year, actually we add on growth, and especially given the last acquisition, our growth is actually boosted quite significantly. If you look on per share statistics as well, especially last acquisition actually boosts our profit for property management actually per share 45% compared to the last quarter. So this is a very, very significant improvement. We pay stable dividends, and long-term equity, of course, was affected by the revaluation of Melon during the quarter, but we still see lots of potential there in the future. So just to summarize why we believe it's an exciting story, we have a unique portfolio of very high quality assets. Those properties are actually inhabited by very high quality tenants, most of them Nordic or multinationals, which means that the risk, underlying risk of the business is very much international, not only the Baltic, but at the same time, those properties are valued at the Baltic yields. This in combination with financing opportunities that are also Nordic gives a significantly higher margin. And those properties generate very strong cash flows, and they have been very stable over the years. We also lead the way, or we lead actually the work in sustainability in the Baltics. And if you want to invest in sustainable assets, this is a very good choice. And actually, we see a very exciting future development, a future for us, not only that we have a very strong growth ambition, but also there is an underlying convergence in our investment regions that has been ticking for the last 30 years. It continues ticking, which means that the growth is slightly faster, inflation is slightly faster, higher, and actually, nevertheless, this region remains competitive. I've just recently looked at some statistics, and it shows that actually the Lithuanian market share in terms of export of services doubled over the last 5 years, despite this high inflation, which means that actually there is quite a lot of value added created in the region. So this is briefly, and I'm opening now for questions.
Thank you very much.
Thank you.
Great presentation. So I guess we can start with the recent acquisition in Poland. As you said, it significantly boosts the NOI, rental income from property management, etc. What is sort of, maybe if you can expand, what is sort of the rationale for going to a new market versus acquiring something in Vilnius or Riga? Or
I think the rationale is that liquidity in our current markets is relatively low. So it has been more challenging to do acquisitions over the years. We still want to continue grow relatively fast and develop as a company. So once we established a very strong position in Vilnius, and today in Vilnius, our position is similar to what Fabege has in Stockholm. So it's difficult to actually double it, basically from that perspective. There's simply not so much physical assets to buy. And in Riga, we've taken a bit more conservative stance. We want to grow through more developments because we see that in general, there's very little of that quality that we would like to buy today. So the market is still very emerging. And then we start looking northwards and southwards. And of course, Tallinn is the smallest capital. And if you look southwards, there is 9 cities similar in size as Tallinn. So, and at the same time, the yields are significantly higher in Poland. We recognize very much the business condition, the terms, the tenants that we used to work from Vilnius. And for us, it was very, very natural to actually start looking and recognize ourselves in Poland. It's still euro-denominated rents. It's still euro-denominated lending. So even there is a currency risk in the market, there's been very stable kind of euro-denominated rent market as such. And the tenants are multinationals playing into euro markets and globally. So from that perspective, it felt much more appealing actually to go southwards now, because yield expectations are a bit high in the northern capital, and south is a bit better.
Makes sense. You also mentioned this sort of high inflation, which I guess everyone is talking about nowadays, and strong rental market. Maybe if you could quantify what in the current markets, what's the sort of like-for-like rental growth? Are we talking 2% or 5% or what? What do you see?
I think if you look like-for-like indexations, they are around closer to 3, I would say. But at the same time, we see a push for higher rents, especially in Vilnius, and this is driven by construction costs, relatively little available stock right now. The construction costs have grown 30 to 40%, maybe even more in certain segments. which means that basically at the current or at level of 15 euros, you basically cannot build and rent profitably. So today we see that the rents are going up, if not talking about euros month per square meter rents. So we're talking about, I think our average is slightly above 15. The current market is 17 to 18 euros and going up to 20. So there is actually, and there is a further push up in terms of for the new leases. It of course depends a little bit on location and the premises and so on that you lease, but in general there is a quite significant push upwards. That push is somewhat weak in Latvia, but very strong in Lithuania right now. So it looks quite strong. And demand actually remains very strong despite the uncertainty. And it's rather maybe the contrary, that we see even more companies moving from Belarus, from Russia, and even from other regions and trying to establish themselves in the Baltics.
And speaking of the sort of building cost inflation, you mentioned 40%.
Yeah.
And you have a pipeline of potential future projects.
They are unfortunately delayed because of that. We are looking and monitoring situation very closely. We are very ready to start one project, but we see that the rents are not actually moving as fast as construction costs have moved. So we just need to look and evaluate the situation a bit more. It's difficult to start a project when it's such short cost commitments by the constructors as well. So from that perspective, it's a big challenge as I see it. But I think we will see with some time what will happen, how it will all evolve.
Do you expect the sort of occupancy in the existing stock to increase on the back of lower supply coming to the market?
Absolutely. In Vilnius, it is very visible, especially in the prime offices, where we see both move towards demand for quality growing. We see basically that basically all of our tenants are in growth mode, so they demand more premises. So from that perspective, we see very strong market fundamentals actually going forward.
That's the final question. I believe a year ago, or almost a year ago, your board decided to look at sort of the logistics space. Any thoughts or any updates on that?
We're looking at it. We're looking at this segment as well. We haven't managed to do any transactions yet. And for us, logistics will probably start with acquisitions anyway. So we continuously looking. Of course, the yields moved very fast, and for us, so we will continue. Of course, the reason for that was actually to be able to continue growing because we saw more limitations on the office market, our ability to grow, and that's why we sort of entered logistics. But now we see much more opportunities in Poland, in both segments. So from that perspective, I think our universe is more easy to achieve those goals.
Makes sense. All right, I think that concludes this session. So
thank you very much.
Thanks for having you, and thanks for listening in.